Welcome to Insights. I'm Eric. Thanks for joining us here today to learn more about the setup in crude oil. We can see we have crude oil isolated inside the matrix, so we're going to talk about it. Crude oil has been up for 4 months and has produced a 14% return. That's a pretty sizable gain. It could be a lot better. Usually, primary trend up moves generate better profits. Perhaps the best is yet to come. One of the possibilities, and we're going to talk about that, is the energy build it's been facing, whether it's been in primary trend upside or the composite trend has been up. It's been leaning against this setup for quite some time. The triple alignment here is an early cycle. The score is minus 0.07, and you can read that here in the composite trend. It's bolded green because it's everything's fairly good to go in terms of the composite cycle itself. June and July are not the greatest months, and we're entering a period of choppiness for the cyclicality of oil. I think more or less the concern is going to be the energy setup. So whether or not this is a chase, the flip was 4 months ago. Everyone's sitting on the core profit of 14% for now. Do you enter an early cycle that's around zero? The cycles, the price and time cycles aren't stopping you. I guess what's most likely going to stop someone is going to be the energy builds, and you can click on this link here to get to them, and you're going to pull up a chart that looks very similar to this right here. And right away, if you're not too familiar with DEI, we'll take a quick look, and you're going to see why crude oil has been struggling to really accelerate. There's been a sharp decline. And this came after everything was shut down, and we've rebounded since then, but the rebound hasn't exactly been super robust. And for the large part, the bearish energy build, which started within these green or red domes here and here, and the flip was around in here. So everything that crude oil has been facing in this one impulse that I marked has been against a blocking dome, and DI and DI2 are minus 35 and minus 16, which is still below zero. So this is a bearish bias, even though it's not statistically concentrated down here like it was before, which fueled the decline and slowed everything. It's not a favorable energy build. There was a little bit of an energy build here, but that was a while ago. If you pull that up, it was probably around in here. So the reset that's taking place here didn't show much of an energy built into it, so there's not a lot of fuel to go after it or to build up for it. So from a standpoint of chasing this reset from a short-term fuel perspective, there's just not a lot of energy there. I'm sure people are going to do it, or people who are bullish crude oil. We should have been bullish crude oil for the last 4 months, but people who are generally bullish crude oil think inflation is going to be everywhere to be found. They're likely going to chase this. But understand, if you buy this reset or if you escalate, it's really an escalation of the core position. So core position is a big part of the portfolio. It's fairly sizable in terms of the position, and then you trade around it. A reset's an opportunity to escalate the core position back to full or to whatever you deem as being the size of the position that you would want to take. But this is not an energy build that supports a major spike. There's energy builds, for example, in Bitcoin and other areas that are far more favorable for continuation or favorable for a trend flip, but we just don't see that in crude oil. And we can talk about, or you can read other reviews, but that's really the setup that you're dealing with if you're chasing this escalation point. In terms of reversals, and I'm not going to discuss them in detail, you can see that crude oil is quickly approaching one on the overhead, and it's probably why it's slowing down. There's some downside support around here if the composite trend loses alignment or loses cohesion. It's going to go into consolidation, and then when it does that, it's going to start to test these lower lines. whether and remember the fuel that's behind the trend is somewhat bearish. It's not statistically concentrated, but it's enough that it will fuel the downside move more than it's going to fuel an upside move. But again, it's like you can't short that stuff because you're going to be fighting against a primary trend that's up, or at least up for now. This could easily be just a reaction in the downtrend, and we could resume again lower. Those are the things that you have to keep an eye on when you watch the underperformance of the Treasury bond or the underperformance of the transportation stocks and the domestic Russell 2000 or the small cap stocks relative to the big names. Those are all hinting towards a trouble in the domestic economy, the rally in the bond market, and falling yields lately. These are all supportive of future economic weakness, of which it's not going to bode super well for the price of crude oil. So keep an eye on all those trends inside the matrix and watch these reversals. In terms of the Pro Index, here's the Pro Index inside here. You can find them in the Pro Charts, which is right here. Pro Charts, click for that link. If you have access to the matrix, click any of these links to pull up the chart. Click the links that say help or Pro Charts to discuss them, to provide videos on how to read them. But they're basically going to say the same thing and what we're going to talk about here. Here's the price action, here's the Pro Index or the professional participation, and here's the public participation. What we're looking for is we're looking for the Pro Index to break out to new highs. It's trying to do that. It's been kind of capped right about here, where prices rallied to higher highs based on a lot of public buying. Professionals are starting to stall. If we take out this swing low down here, it suggests there's more selling than there is buying, at least from the professional side of the equation. And that warns that there could be some weakness and at least consolidation or more ahead. So keep an eye on these pro charts. But a quick summarize of this whole review, that we do have a reset. The core position is up. It's been up and it's made it's made a decent profit. You can see it's contributing. There's 38 winners and 5 losers inside the matrix right now. Most of the winners are profitable, whereas the losers are kind of hanging around the zero line. Uh, Crude oil has been one of those contributors. It's not super significant, but it's decent, and it is resetting right now. It's early as opposed to all these mid-cycle resets that subscribers have been reading about and following and chomping at the bit to buy something or to do something. And mid-cycle or late cycle is definitely not something that you want to play. Early cycle is better. This is not significantly below zero, and it's not significantly below zero because the weekly cycle is extended. You're starting to show extension. It's not bolded red, but precursor price, the weekly rally at 31 weeks, is starting to get extended here, and it's not going to be too long before it is. So that's starting to cap crude oil. Most of the resets, if we go forward here and attempt to reset, is going to be right on the border of an early cycle reset or a mid-cycle reset. So again, this has not been the most encouraging play to begin with, and that is largely a function of the chart that we're looking at, a waterfall decline and a reaction against this. The market is not going to V-bottom and take off. Most likely we are at some point going to retest these lows, but that's not going to happen until the primary trend goes down and the composite trend realigns with it. And you have to wait for that within the evolution of the trade. Everyone who subscribes here understands the importance of the evolution of the trade as a trading discipline. If you're new to it, I would suggest clicking the link here, watching the videos, reading the explanations of how the evolution of the trade works and the 4 phases that it goes through, and why we follow it, and why the trading discipline is important for not only making money but containment of self, because self is the greatest enemy when it comes to trading and investing. So I want you to keep an eye on crude oil. The bulls are certainly still in control. This is not the greatest flip in the world or the greatest reset. Sorry, flip is green and an F. This is a reset. This means that the primary trend is already up and we've already had alignment. It's just realigning back again. It's the market breathing in and out. But this is probably not the best one that we've seen. Better than the mid-cycles ones that come up, But again, success, even in resets, has to do with whether or not the energy build was favorable. And it's just not the best energy build in the world. If you buy this one, understand what you're doing. Personally, I look for stuff that's easier than this, but it's crude oil path of least resistance is up, and nothing's going to change that until the primary trend flips down. And the primary trend's only been up for 4 months, but and it doesn't mean it's going to have to go to its mid-cycle. But these are all still negative and black, so there's a lot of room to run on the monthly yet. But if we lose this from up to down, it changes the whole equation within the evolution of the trade. The computer will start to talk about different sets of instructions than everything we're talking about right now. If you have any questions, anything, any subscribers, any questions about specifically, you can let me know. Contact me directly back at the blog. If you're uh, looking on the video and wondering about the evolution of the trade, I suggest going back. I'll leave the link underneath the video to go back and learn more about it. It's far more than an interesting concept. It's far more durable. The internet in general lacks trading discipline and investment discipline. It's just a bunch of people chasing everything that everyone else is doing, which usually leads to distress, frustration, and losses. So try and stay away from that. The evolution of the trade is a specific discipline based on price and time and energy cycles and the flow between the different time frames, the daily, weekly, and monthly, as trends breathe within an infinite number of time frames. We focus on 3 here for the evolution of the trade. You can expand that to about 4 if you want to look a little bit longer term, but it's really not necessary for the general public to go much more than 3 different time frames. So that's where we stand with crude oil. If you have any questions, let me know. Thanks for watching and enjoy your trading day.